Hi, and welcome to Elevation Training. My name is Jodie Porteous, and I am a Profit First professional. So, today I wanted to run through long term cash flow forecasting and show you some tips, and tricks on how this can work for you. So, do have a bit of a spiel written down because I don't want to forget anything really important. So, let me just talk to you and read my notes at the same time. So, cash flow forecasting is totally different to your bookkeeping. So, your bookkeeping is keeping a record of your ins and outs for tax purposes. So, we classify your income as income, costs as expenses, but we also classify some things that you pay for as liabilities and assets that you buy as assets. And then when you take money out of the business for your own personal use, you might see that come out of a shareholder's loan or a beneficiary payment or something like that, might be an equity payment or a dividend. So, lots of different ways to classify taking money out of your business. So, your bookkeeping is set up in a specific way that helps prepare reports for tax and GST, but it doesn't reflect what happens from a cash point of view. And I have been through this in a previous recording where I talked about GST being separate to your profit and loss report. So, if you run a profit and loss report, it's excluding GST. Your GST sits over on the balance sheet. Now, you might get a deposit of $110 in your bank account, but the $100 goes in as income, the $10 goes in as GST. Now, that doesn't help or reflect what comes into your bank account based on the reports. So, a lot of businesses use cash flow forecasting a very, very, very short term. So you might be looking at this week, this fortnight, or this month, and you generally don't feel like you can forecast out any further than that. And what this means is we're looking very, very short term focused for our business. And we're not always taking into account those longer term bills or those longer term payments that we're required to pay as a part of being a business owner. And this means that a lot of people, when they're doing the short term cash forecasting, get caught because they're not putting money aside for tax every week. They're not putting money aside for superannuation every week. And they're certainly not putting aside money to take advantage of annual subscriptions, annual insurances, and all of those extras that you can pay a little bit more, get a reasonable discount for, and but it ends up cheaper overall. So you're missing out on discounts because you're only thinking very, very short term. Now, you might be sitting there going, but this is the reality that I'm sitting in. And I can't move forward and predict what my income is moving forward. I can't predict what my costs are moving forward. I don't know what my customers are going to do. And what I say to that is your future is generally going to be something similar to your past, generally, unless you've made significant changes. And worst case scenario, if you're on an upward trajectory of income, then you can focus on and expect what you're getting in now. And then if you're thinking it's going to go up, then absolutely, it will probably go up. But let's work on a conservative figure of what you're going on now and estimate that moving forward. Another thing that I see when people look at short term, very, very short term cash flow is they get stressed out about when people are paying us. So you ring your customer and say, hey, you owe me X amount of dollars. When are you going to pay? They say Tuesday. The money's not in your bank account on Tuesday. And it gets really stressful because you've promised other people to pay money on Wednesday. And so I see this as a big spiral. And it's very common in a mining town when the big mining companies pay. I know those pay dates. and I can see that money being transferred into this business the next day, using that money to pay their suppliers, those suppliers using that money to pay the next people down, and it just filters down through the community. And so everybody's relying on that big mining company to pay on that particular day so that everybody else can get paid and filtered down. And this is probably true for quite a lot of our clients, and waiting for somebody else to be paid so that you can be paid. This is business, this is life, right? So, what I want to do is open your eyes up to using a method called Profit First, and using a program called Profit First Profit. So, profit as in seeing the future, to work out how much money you need to bring in today and ask from your clients today, or even stepping back a step, how much you need to invoice every week or every month in order to have the money so that you can afford to pay the bills. So instead of getting to a point where you're going, okay, so I need this money in today to pay these bills and these wages, let's look at a longer frame of mind and say, okay, well, how much do we need overall to pay for all of these staff members? How much do we need overall to pay for all of these bills? And you might think I'm talking about a budget here. I am, but a budget is well, sorry, a budget can be one of two types of budgets, and I'm totally off my script now. This is really cool. So you've got a cash flow budget, which is what I've been talking about. That really short term budget that a lot of businesses work on. Generally, it's a spreadsheet or a handwritten document saying this is what I've got coming up, and this is what money's being paid to me. And then we've got the profit and loss style of budget, which is I think I'm going to generate X amount of invoices for the year, and all of these are my bills. And what that missing step is in between the really short term cash flows and the profit and loss budget, what you think you're going to achieve for a whole year, is this longer term cash flow. Do you have the cash in order to do all of the things you want to do in your business? Because it's great sending out invoices of $100,000 for the year, but if people aren't paying you on time, then you don't have the money to pay yourself, to pay your bills, to pay all of the other bits that go along with running a business, like paying taxes, paying superannuation, which are generally bottom of the list for a lot of people because, hey, the tax office doesn't call as often. The tax office won't cut you off like the phone bill will if you don't pay for it. So it's competing priorities and competing timelines that make it really hard to run a business and to work out how you need to manage your cash flow. So let me show you a diagram of the profit first bank account setups that we recommend at Northwest Accountancy. Here's my screen. So this is our recommended setup for Profit First. So as we can see, there's some blue circles and some orange circles. The blue circles are generally all going to be set up in one bank, and the orange circles are going to be set up in a different bank. And this is the set and forget type bank accounts, whereas the blue ones are those everyday accounts that you'll be putting money into and taking money out of. The way that Profit First works is that you have all of your money filtering in to your income bank account. And once you've got that in there, you can have a system or a routine in place where you, on a day each week or a day each fortnight, most of my clients do weekly because it's set in the diary once a week to log in and have a look. And we go through and we allocate all of the money that's in the income account out to the different bank accounts. So there's a materials bank account. So if you're paying for stock or if you're paying for subcontractors to do the work for you, then yes, you need to pay them first. So there's a separate bank account for that. Following the little arrow down, we've got the bills account. So this is the bills for what you need to pay to keep your business going. Then at the bottom, which is not less important, it is your owner's pay account. And so this is the bank account that is set aside specifically so that you, as the business owner, can be paid every single week for the work you do. Quite a lot of business owners that I've talked to over the years have said, no, my staff are more important, my bills are more important, my everything else is way more important than paying myself. I love this job, it's just a passion for me. But as soon as they've switched over and started paying themselves, they've gone, oh, yeah, I'm an integral part of this business and I deserve to be paid for the work that I do. So we go from a passion piece to a I'm here and being paid for my efforts. And the mindset of having that pay from your business every single week or every fortnight or even every month can make a huge, huge difference to how you show up in your business and the types of work that you do as well. Then we've got our orange ones. So we take the money out of the income account and we put it into a profit bank account. Now, this is really important because the system is called Profit First, but the system is all about creating profitable businesses. Now, if we're working on a very, very short term weekly cash flow, we're probably not thinking about putting money aside for profit at all. We're probably thinking about which bills can I pay and get them stop calling me. And so having a bank account set up with profit for profit means that every quarter you can turn around and go, even if there's 1% going into this profit bank account, it's money that you're not spending on running the business. It's money that you're accumulating because you're running a profitable business. So having a profit bank account is really super important from a mindset point of view, but also from a practical point of view. Profitable businesses last longer. Profitable business owners are happier. Profitable business owners are more comfortable with their business because they've got money associated with profit that they can go, yes, I am the owner of a profitable business. Then on the last one is that taxes bank account. So we've got taxes, we've got money put aside so that when that BAS comes in, when that end of year tax return comes in, the money is there. And it's a huge lifesaver for most businesses who then start putting money into that taxes bank account to turn around and go, you know what, I never have to do another ATO payment plan ever again, is amazing. Okay, so this is the Profit First bank account. I'm going to stop sharing that screen so you can look at me again. So by having this setup of having the different bank accounts set up for a different purpose, but also every week transferring money from your income bank account into all of those different bank accounts, it means you can have a more granular view of what you're budgeting for, what you're setting your money aside for, and being able to see if you've got the money to pay for the bills coming up. So taking a percentage and putting it aside for taxes means that if you're looking at bringing in $2,000 a week into your business, then a percentage of that automatically goes to the taxes bank account, and you don't need to think about it until the BAS is due. And then hopefully the percentages have been set up right so that you can go, yep, the money's in my BAS account. Here you go. Don't need to stress. And we have so many people around the world using Profit First who have that very first experience of having a tax bank account and go, I've got money to pay tax and I don't need to stress. And you know what? I'm paying it early because it's so cool to pay it early. So that is super cool for a lot of people to have their tax set aside for the first time ever and not have to go, oh, where am I getting this money from? Maybe it's part of this week's income, maybe it's part of next week's income, rather taking a piece out of every single week's income and putting it aside for that particular bill. So the second part of what today's training is about that longer term forecasting. So you might still think, oh, okay, so we're putting money aside into different bank accounts, how is that going to work long term? So I've got a program called the Profit First Profit that one of my cohort at Profit First in Australia has designed as a website. So anybody can access it from anywhere. Obviously, it's big, nice on a big screen. But what will happen is we've got this way of seeing what's coming up and due for payment, not just this week, but for following weeks and months as well. So I'll just run through very quick demos. So up the top first is we've got the bank account. So the bank account's down the side here, and then the percentages rolling through as well. So I've stuffed up my percentages and can now see that 100% of the income is allocated through to each of the different bank accounts. And so just ignore the fact that I've got GST here. All my calculations for GST go into the tax bank account, not as a separate bank account, but that's okay. So we've got the system set up with automatic calculations. Then we can go through, and every time we get money in to the bank account, we can use this actual system here. So if you've received $1,500 in your bank account this week, the system will automatically calculate based on your percentages how much to be allocated into each of those different bank accounts. So if we were working on these standard percentages here, and receive $1,500 in the bank account, we would do a deposit into our profit bank account of $75. We would do a deposit into our tax bank account of $225, owner's pay of $750, OPEX of $375, and then materials and subs $75 to pay for materials or for your contractors. So I'll run through some of those terms in a little bit. But the next one is how does this forecasting program know what's going on? So this page here, the balances page, talks to you about what your actual bank account balances are. So if your expected balances based on what I've just put in the previous page in the calculator page don't work out, then sometimes your income's higher and so you'll put more money into the account. Sometimes the income's lower and so you'll put less money into the accounts. So this is that double check of what all the balances are versus what was expected at the time. And the other thing is, have you made payments to specific things? So, for example, OPEX are your bills. Have you paid out some bills that you weren't expecting? And how is that impacting on the bank account balances moving forward as well? So I'm going to leave these balances in here. This is based on $2,000 deposit into your bank account. So I'm just going to press save on that one. And then we can roll forward. So I've put a few basic assumptions into this system, saying that we've received income on average of $2,000 every single week on a Wednesday. Now, you might receive $500 and $250 and $250 and $750 and $100. But what I like to do is give an estimate of what that total income would be. Now, the great thing about this system is it's really easy to estimate. It's really easy to customize as well. So in our business at Northwest Accountancy, I've got multiple revenue line items in here, and it's all based on how much we expect to receive each quarter. I've got another business who runs a training business. And so for each of the different lines of training types that they offer, they've got a different income calculation based on the number of students that are coming in and the amount per person they charge, and then the amount of courses they run each month as well. So we've broken it down to a weekly or a monthly figure for each of those, depending on whether they're running the courses weekly or monthly. And it's forecasted out to see how much it is. Now, putting these figures in, we can go all the way out for a few years so that the income is estimated at a particular amount. So for me, I've got in 2,000 per month. Then here's where the spreadsheet on steroids a bit starts. And this is about expense entry. And we're putting in, based on each of the bank accounts, what sort of things you spend out of each account and how much you're expecting to spend out of that account as well. So we can see out of the tax bank account, we're looking at BAS and PAYG. We're looking at pay-as-you-go installments. We're looking at tax, year-end taxes. We're looking at superannuation payments. So anything from a tax and superannuation payment point of view, we're building this out. Anything, so with our owner's pay, I said before, 50% to owner's pay. So having a distribution where we can see that we're actually taking money out and physically paying that to yourself. So is a real way that you can go, yes, this business can afford to pay me, rather than jumping in and going, yep, let's let it pay me, and then going, oh, this isn't working. We can do these forecasts and see how it actually works and what those bank balances will be. So on this screen here, we've got 3 weeks worth of projections. So the owner's pay bank account currently has $200 in it. Then we're going to transfer in $1,000 based on a $2,000 worth of income. Then we're going to take $800 out and pay it to ourselves as the owner. So this gives us a closing balance of $200 for the rest of the week. Then we're going to add another $1,000 next week, take off the $800 that we'll pay ourselves, and that will leave us with a balance of $400 for the rest of the week. Then we're going to add another $1,000, pay ourselves $800, and then there'll be $600 left in. So you can see there's a flow and a wave effect of having money in here. And if you only receive a deposit into your bank account of $1,000, then hopefully you would have enough money buffer sitting in this owner's pay bank account that you don't have to stress. You can still pay yourself the $800. So paying yourself less than the allocated percentage is really helpful and will create those buffers in there so you can have some time off, and allow for lower periods of income throughout the year so that you can still afford to pay yourself, but the business can afford to pay you when there's not less income coming in as well. Now, scrolling through OPEX, I mentioned before, was bills, and I haven't built this out because I didn't want it to be too confusing. But things like subscriptions, insurances, any annual or monthly fees. So if you're renting a premises, it would be rent and electricity coming through here. If you've got staff, then you can either put your staff through the OPEX account or you can have a separate staffing bank account. I have a separate staffing bank account. I love it. And then materials and subcontractors is for making sure that your contractors are being paid because they're the ones helping you do the work. So you can see a little snapshot of how this system creates the rules around what money comes in and what money goes out of each bank account. And then here's where the magic happens in the forecast button. So this forecast shows a weekly forecast of what the bank balances will be based on the assumptions that I've put in the system. So today we've got $100 in the profit bank account, $300 in tax, $200 in owner's pay, $350 in OPEX, and $100 in materials. So in materials, I haven't actually put in there that we're paying anyone. So this amount just keeps going up and up and up. The owner's pay account, we're putting $1,000 a week in, but I'm saying that we're taking out $800. So you can see this balance goes up and up and up and up. OPEX, I've got enough money in there being transferred through, but when I build out and put more expenses in, you might see that this fluctuates over time. So like in my experience, I've got bills, lots of bills that come out around the first week of the month and then not many in the middle of the month, but I get paid a lot more in the middle of the month and then less bills coming out at the end of the month. So knowing those those flows of how the money's flowing through your business, from money coming in to money going out, can make it more visual here to see what those bank balances are. So this is the sneak peek, or the share of how you can do profit forecasting and cash flow forecasting in your business to make it easier to find out how your business is going. So I've got a couple more points that I want to read out. So forecasting for the longer term, so longer than just this week or next week, can help you give peace of mind, clarity, and a sense of calm. So I've been running this system for almost a year now. So November last year, I set it up. We're in September now. And I've just felt more comfortable making decisions, longer term decisions about the business, because I can see, well, based on history, we've received this amount of money in our bank account at this time of year. So I've built that into the system. I've gone, okay, so I can afford to pay wages. I don't need to stress about that. I can afford to pay that huge insurance bill in March up front because I should have the money set aside for that. So I've got that peace of mind. We can also react quickly but more strategically. So if somebody doesn't pay you and you're working on a very, very short-term cash flow, it's all panic stations, right? Who can afford not to be paid? Can we make some phone calls? Can we stretch things out a bit? Whereas with the longer term forecasting, we can see that the business will have an opportunity to bring money in later on. So we can go, what resources do we need now to get more income later on? And so you can start to think more longer term, 2, 3, 6 months out, rather than immediate. You don't have to worry about bringing money in today to pay today's bills, because with the allocations set up, you go, well, whatever money is in the bills bank account are the bills that we have to pay today. Is the money that we have for paying bills today. So if we've got more bills than money in that bank account, then we can look for a better deal. We can pull the timing out. We can see what needs to be cancelled so we can stop spending that money. But when you're thinking very, very short term, you don't think about what can be cancelled or pulled out a little bit longer. You're just like, oh, there's a bill to be paid. I need to pay the bill. So it reduces your stress thinking more longer term than shorter term. And then you know that you've got that money set aside. So you know that you've got money set aside for taxes. You know you've got money set aside for super. You know you're making a profitable business. And at the end of every quarter, you've got an opportunity to take that quarterly money, that money out of your profit bank account, and celebrate with it, to celebrate the fact that you are running a profitable business. So that's it for today. A little bit longer recording than I normally do. If you do have questions, or if you want to see a live demo on the Profit First Profit, I would love to show you, have you in, ask heaps of questions, show you how it can work for your business. It has been a game changer for Northwest Accountancy and my business. And for me personally, as a business owner, knowing that I can forecast and see what's happening for the next 6 to 12 months in my business, and I don't need to stress, has been amazing. I want this for you. So if you're keen, then please reach out and let's do a demo.